is Alan Bush with the Daily Financial Forecast for Thursday, January 23rd. Stock index futures are trading mixed this morning. Recent gains can be linked to strong earnings reports and growing optimism around President Trump's policies. This with investors expecting tax cuts and deregulation to drive economic growth and corporate profits. So the bullish influence of prospects of a strengthening U.S. economy appears to be more than offsetting the bearish influence of fears that the Federal Reserve may be slow to ease credit conditions. And in the currency markets, the dollar index trading higher today. Recent pressure on the greenback taking place when President Donald Trump refrained from imposing harsher trade penalties early in his term. Markets had feared protectionist policies might derail global growth and fuel U.S. inflation. Also, we'll have the European Central Bank holding its policy meeting next week, and it seems likely that the ECB will be cutting rates then. Also, we had sentiment in the UK manufacturing sector marking its steepest decline in over 2 years, according to the Confederation of British Industry. So it still looks like the long-term fundamentals are bullish for the dollar index, even though it has suffered some declines in recent weeks. And it still appears that the main trend is lower for the euro currency and also the British pound, as the economies of the Eurozone are weakening. Also, the UK economy seems to be coming under some pressure. Interest rate futures markets, we are seeing futures mixed at the front of the curve, lower at the long end, especially the 30-year Treasury bond futures. Still looks like the Fed will remain on hold over the next few meetings. That would include the January meeting, the March meeting, May meetings. All will probably see the Fed maintaining current policies, but it's the June meeting where we are likely to see a 25 basis point cut from the FOMC. So with this in mind, a Fed that is slow to move to more accommodation, I think that should put pressure on futures, especially the 30-year Treasury bond futures. So once again, keep in mind, these are my opinions alone and are not the opinions of ADMIS or ADM.